So going back to the dealer, there's two sections in the code that we need to kind of consider. It's 1221 and 1231. So this property under those codes is inventory, not an investment. This is where everything changes for her. So, she bought the same building, she renovated it, she sold it for a profit, right? She's going to sell it. In between then, she's managed contractors, right? She's deducted those improvements, I hope, as business expenses, and she's
Right.
marketed the property herself. So tons of things that we can take a look at from that end. But let's talk about the actual sale. So the $1 million gain, I should say, in this case is not going to be long-term capital gains, right? So it's going from 20 to her top bracket, which you said was 37%. And luckily she's in Florida. If this were in California or these other places, it's going to be a lot higher than that. She's looking at 40 plus, right? So now depreciation recapture, still got to worry about that. That's going to be taxed at 37%, right? So you don't even get that 25% break. So you can see how everything changes here. So that is going to be about 148,000 according to my little math here. So we said $1 million gain tax at 37%, 370K plus the 148K that we just talked about via the depreciation recapture. Here's another thing. This is where it gets like really, and people start like, oh no, now self-employment tax. She is, as a dealer, self-employed. So what does that mean? That would mean that the 1.4 million, right, is going to be at tax at a 15.3% self-employment tax rate, $214,200. So when we look at everything, roughly, it's going to be about $732,000. So we have no 1031s, we have no installments, and we have no capital gains. Right, so it's a little more bleak than, say, the investor scenario.